Investing 101, a beginner's guide to stocks, bonds, and mutual funds. Welcome back to Simply Money, the place where we break down complex financial concepts into simple, understandable terms. Today, we have an exciting topic for you: Investing 101, a beginner's guide to stocks, bonds, and mutual funds. If you've ever been curious about how to start building your wealth through investments, you're in the right place. And let's dive right in. Before we get started, don't forget to hit that subscribe button and ring the notification bell so you never miss out on our valuable financial tips. All right, let's jump right in. Number 1, why is investing important? Before we get into the nitty-gritty of stocks, bonds, and mutual funds, let's talk about why investing matters. Investing is the key to growing your wealth over time, beating inflation, and achieving financial freedom. It's like planting seeds that grow into money trees. Number 2, stocks, the ownership piece. Now let's start with stocks. When you buy a stock, you're essentially buying a piece of a company. This makes you a shareholder, which means you have a say in the company's decisions and a claim to its profits. Here's what you need to know. 1. Stock basics. Stocks are traded on stock exchanges like the New York Stock Exchange or NASDAQ. They represent ownership in a company and come in different types: common and preferred. 2. Risks and rewards. Stocks can offer high returns but also come with higher risks. Companies can perform well or poorly, affecting your investment. Number 3. Bonds, the lender's game. Next up, bonds. Bonds are like loans you provide to governments or corporations in exchange for periodic interest payments and the return of your initial investment. Here's the lowdown. 1. Bond basics. Bonds have a face value, interest rate, coupon rate, and a maturity date. They are less risky compared to stocks, but typically offer lower returns. 2. Types of bonds. You'll come across various types, including government bonds, corporate bonds, and municipal bonds. Number 4. Mutual funds, the diversification tool. Mutual funds are like investing on autopilot. They pool money from multiple investors to buy a diversified portfolio of stocks, bonds, or other assets. Here's what you need to know. 1. Mutual fund basics. Mutual funds are managed by professional fund managers. They offer diversification, making it easier for beginners to invest. 2. Types of mutual funds. You'll find equity funds, stocks, bond funds, bonds, and hybrid funds. Number 5. Getting started. So how can you get started with investing in stocks, bonds, or mutual funds? 1. Build an emergency fund. Ensure you have 3 to 6 months' worth of living expenses saved in an easily accessible account. 2. Set investment goals. Determine your objectives: retirement, buying a home, or funding your child's education. Investing doesn't have to be intimidating. Remember, it's a long-term game. Stay informed, keep learning, and stay patient. To summarize today's session, we covered the basics of stocks, bonds, and mutual funds. Each has its own risk-reward profile, and the key is to diversify your investments to spread risk. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell to stay updated with our future financial education content. If you have questions or want to share your experiences, leave a comment below. Thank you for joining us today on Simply Money, and we'll see you in the next video. Happy investing!